Welcome to Valuatum's Excel model tutorial video, which will guide you through the basics of valuing a company. We hope you'll take a few minutes of your time to learn how to produce accurate valuations using Valuatum's professional tools. Valuatum's offering includes an Excel valuation model, which is the ultimate starting point for the valuation of a company and forecasting financial information in equity research. In this video, we show how the analyst enters and modifies the financial information and estimates of a company. As an immediate result, the analyst receives the fair value of the company and a large number of financial ratios. The information can further be used to publish reports about the company, or for instance, about the industry it belongs to. This information can also be used in portfolio analysis or comparison of companies. Let's start by going over the basic rules and structure of the Valuatum Excel model. This model has two kinds of sheets, input and output sheets. IDivQ is used for quarterly and divisional income statement forecasting. IMain is used for annual income statement and balance sheet forecasting with a full DCF valuation model included. These are the two sheets you will be primarily working with. IBJ can be used for filling the background information of the company. Output sheets are only a reproduction of what the analyst has inputted to the other sheets. The model has three standard output sheets for quarters, overview, and a sensitivity analysis, but additional output sheets can also be created. We'll come back to the O-risk sheet in a moment. In the top center of IMain sheet are discounted cash flow and economic value added fair values. Input cells for a company's current price, target price, and recommendation are located below the fair value. The company name and currency can be inputted to the cells on the top left. In order to keep the income statement and balance sheet coherent, there are some restrictions about which cells the analyst can modify. White cells with blue font are input cells for estimates. These are the cells you work with and you are allowed to change. These cells may also contain analyst's own formulas, links within the sheet, or links to the analyst's own sheets. Gray cells with blue font are input cells for actualized historical figures. These figures are reported by the company. Gray cells with black fonts are not to be changed. If the analyst tries to change these cells, the system will recommend him not to do so. White cells with gray font are dominated cells. In some cases, you can forecast using absolute or relative figures, and the colors of the cells indicate which are dominating. In this case, for example, the percentage input becomes active after the dominating absolute number is removed. Pre-filled models can be uploaded from the Valuatum database to the Excel model. First, navigate to the IMain sheet. If someone in your organization has uploaded the data of the company to the database, or if this data is imported from a data provider like Bloomberg or Thomson Reuters, you can download the pre-filled figures to be the starting point of your analysis. If there is no pre-filled figures available, the analyst needs to enter these figures to the Excel model himself or link them to his own Excel sheets. The model will first ask for login credentials. Then the model will allow the analyst to choose a company from the list. In this case, we'll take Stora Enso, a Finnish paper company. It is possible to download figures only from certain years. For example, an analyst can choose to download only historical figures. However, in this case, we'll download all data and we can start our valuation. The company valuation is started by inputting divisional and quarterly estimates to the IDivQ sheet. The rows can be ungrouped by clicking the button at the top left corner. If you don't need a section, you can hide it by clicking the small minus mark. Your company's division names are written in the top left section of the IDivQ sheet in blue font. The forecasting is easier if you start from net sales. You can estimate sales with either absolute quarterly figures or using year-over-year growth rate. Absolute figures dominate relative figures, so the percentage cell changes to gray if you input an absolute figure. For operating profit, the logic is the same. You can either forecast the absolute operating profit or operating profit as a percentage of net sales. The info box will show you the operating margin percentage in any case. After the operating profit, you can estimate the rest of the income statement: depreciation, net financials, and taxes. The income statement for the 3 years following current estimate years are also forecasted in the IDivQ sheet. The analyst can choose to forecast either annual or quarterly figures. The quarterly figures dominate annual estimates. Estimates from the user's own area on the right or from analyst's own sheets can be linked to the Excel model. Therefore, the analyst can make his own, more precise forecast, and they will update on the go. Here, for example, we increase our volume estimate and it changes the corresponding year's net sales estimate. In addition, if the analyst has previously been using his own Excel model, the old figures can be linked to the Valuatum Excel model and the valuation can continue from these figures. Next, we will show you how to fill in the actualized figures and how to change the year. At the bottom of the IDivQ sheet, you have the cumulative section, which is used for inputting the actualized figures reported by the company. First, insert X to the cell of a corresponding quarter. Now you can fill in the result. Please bear in mind that the figures in this section are cumulative. If the actualized quarter was the last of the company's fiscal year, the analyst should carry out a year change. Valuatum has developed a year change macro that saves the analyst from unnecessary manual work after the company's fiscal year has actualized. After filling in the actualized Q4 figures, the analyst should go to the iMain sheet and complete the full year income statement. In addition, the year-end balance sheet should be filled. Now the year change macro is ready to be launched by pressing the Change Year button of the IDivQ sheet. The model offers to make a backup copy, and this is strongly recommended. The year change is ready and all the figures and links have been automatically moved to the right year. For long-term income statement estimates, the Valuatum Excel model uses the iMain sheet. The forecasting of different income statement variables is done by using the parameters at the top of the iMain sheet. If you need to know the definition for some variable, simply click on the question mark on the left. The most important variables, net sales growth and operating margin, are the first variables to estimate. The figures inputted to the last estimate year are also used as terminal period estimates. You can estimate interest expenses either as a percentage of interest-bearing debt or as an absolute value. The same applies for financial income, which can be estimated as a percentage of cash or as an absolute figure. The automation of Valuatum Excel model might sometimes cause an error in the DCF fair value. This can be fixed with the Fix Interest Expenses button on the left. This activates an iteration, which fixes the error. Click on the Income View button to see your income statement estimates. Next, we will move on to the balance sheet. The Valuatum Excel model is designed to automatically balance assets and liabilities. This enables the analyst to concentrate only on the most essential items. When forecasting the balance sheet, you can facilitate your work by first selecting the Balance View mode on the top left corner. Balance sheet parameters are usually forecasted as a percentage of net sales. The analyst can choose to forecast tangible assets as a percentage of net sales or by using gross investments into tangible assets. Working capital parameters are also estimated as a percentage of net sales terms. You will have inventories, receivables, cash, and non-interest-bearing liabilities to forecast. Note that changes in the terminal year estimates for balance sheet items may have a significant effect on the fair value estimate. Weighted average cost of capital parameters can be adjusted on the left-hand side of iMain sheet, below income statement and balance sheet. As you can see, changing the parameters can affect the fair value greatly. Below the weighted average cost of capital parameters are the discounted cash flow and economic value added valuations. These valuations are based on the analyst's income statement and balance sheet forecasts. In the O-risk sheet, you can do different kinds of sensitivity analyses for the DCF fair value. Define how much you want to change the parameter in each step and click on the Macro button to see the results. Results are shown in the graph and table. The analyst can also create his own sensitivity analysis in this sheet. When you are ready with your estimates, you can upload them to your database by simply clicking on the Update to Database button on the iMain sheet. Your new estimates will be on the database and on the Valuatum web portal within a few seconds. You can also see when the model was updated to the database by selecting the company from Valuatum Company Views. You can find further information about Valuatum's Excel models from our website, www.valuatum.com. And if you have any questions, do not hesitate to contact us via email, support@valuatum.com. We hope this tutorial was helpful, and thank you for watching.